if you haven't done a budget sheet and really looked at what you're spending, I remember my first time linking with a financial advisor and really, pen by pen, figuring out what am I spending. I was disgusted. Yeah. Like, to be honest with you, the amount of money that I spend on a month, if you don't think about it, you're not going to know. So like I mentioned, those things that we do on a day-to-day basis, whether it's go to Starbucks or maybe getting your haircut every week instead of every other week, those things that are very, very small to you and you don't think about it, in the long run, those add up significantly. Yeah. So that's when we're looking at our lifestyle, what are the things that we can actively do to bring it down a little bit? And that's, obviously we want you to be able to enjoy yourself, but in our budget, make room for the things to enjoy ourselves. You got your necessity. Mm-hmm. You've got entertainment. Mm-hmm. You have those things set up so there's no surprises. And all these different things. Yeah. You don't want any surprises. You want to be able to enjoy yourself, be able to save that money in case there are those investments and things that you want to make. And then also having that emergency fund in case something happens. Yeah. These things are all planned, but if you don't do some sort of a budget sheet, you're kind of just, what I'm gonna say is going through the vibes. Yeah. You know what I'm saying? You're not really planning for your future. You're just living check to check. And who wants to do that forever?
Hey, dreaming how dreamers do. Most of my life feel like deja vu. Even when the pressure's on, I'm careful how I make my moves. Mamba mentality, I ain't come here to play to lose. Why would I play with you? But if you made me choose, I'ma go with me. You down to go with me? Of course it won't be perfect. It'll feel complete to say the least.
What up? It's Tobin. It's my boy Mike. It's All Things Considered, the podcast, episode 6.
Like and subscribe. Show some love to us, y'all. Let's get it. This is a great pod right now. This is a great pod. I'm looking forward to it.
We're doing things a little bit different. As a full-time entrepreneur that Mike is, myself, full-time in sales and marketing, we wanted to get into business a little bit. We talked to our followers and subscribers and wanted to see some of the topics that you guys wanted to hear more about. So looking forward to diving into this today a bit.
Yeah, business series. This business series, first part of episode of the business series. Looking forward to it. You guys know I'm a full-time entrepreneur. I've been pretty much all over the place. I'm one of those serial entrepreneur guys that you guys know, primarily doing a lot of real estate right now. I have an event center in Dallas, Texas. A little bit about myself. I think next year would be year 10 for me. So I'm a couple of months out from being 10 years in as writing my own checks, so it's been a good journey. It's been some ups and some downs, but I'm excited. I'm excited to be sharing them, my experience.
Yep. I'm looking forward to learning. For me, I'm about 6-7 years deep in medical sales, which has been great to me and my family. So I don't want to call myself a master in sales and marketing, but I do know what I'm doing a little bit. So
okay, talk that talk, bro.
A couple of awards won here and there, I'm saying? Nothing too crazy, but this year I've stepped into entrepreneurship myself, getting into a couple of different business investments, some real estate projects. So nice. Looking forward to learning as well in this series, but sharing to you guys some of the knowledge that we know.
Nice. So just to kind of pop things off, bro, I guess I'll ask you, like, if somebody's looking at you right now, you said you've been in sales for about 6 or 7 years. What do you feel like is the biggest thing you accomplished during that time? What would be that number one thing that you would say?
The biggest thing I've accomplished, man, I feel like the way my company has grown, I've grown with it. With that, I've been able to buy a house. I've been able to start a family. I've been able to provide for my family very well. I've been able to help take care of my parents. And houses that I don't live in anymore. Yep. And to that, I take those things very, very seriously because I know not everybody is blessed to be able to do that. Right. So those are huge accomplishments for me. And then as far as in my respective field, I've been multiple award winner, broken quota several times, every single year. Nice. But I'm ultra performer, 200% the quota. I've been a high performer in my position for a long time. Nice.
Now, I know that, your industry, the turnover is crazy. Mm-hmm. You know what I'm saying? The attrition, there's just constant attrition within you guys' industry. So what do you feel? You talk about the multiple award, you talk about being able to match quota. What do you feel separates you? Like, why have you been able to withstand that constant turnover year in, year out?
Man, there's so much that goes into it. Just the idea of being coachable.
Yep.
The ability to be led.
Yeah.
The ability to lead. You have to be both. Some people go into this space as kind of like a lone wolf and think that they can go about that.
Yeah.
But what happens when you need to bring people up with you? You have to be able to coach people up to do the job that you're doing so you can get taken to the next level yourself. You can't go to the next level until you've got somebody ready to replace you.
Right,
you know
right,
what I'm saying? So I think just the ability to be a hardworking, disciplined, coachable person is going to serve you a long time, because what I do is not easy.
Yeah.
And if you're not doing it well, it's not fun either.
Right.
You know what I'm saying? So that's why you see the turnover when people aren't necessarily seeing the income that they want to see. It's like, I got to jump ship and do something else.
Right.
Being in sales gets fun when you're selling.
Woo! Talk to him.
You know what I'm saying? So,
it's a good time when you're selling.
So for you, obviously, going on 10 years of, entrepreneurship.
Yep.
Recently, I guess it's almost a year now, you had your event center. What would you say are some of your biggest accomplishments that you've been able to do?
Yeah, it's been a year. We started May of last year. Mm-hmm. To be honest, not to just, be that like numbers cliche guy, but I've never, prior to 2018, I never hit 7 figures, in revenue in 1 year. I never hit it. And 2018 was the first year that I became a 7-figure earner within one vertical, So that was very exciting to me. I used to own a e-commerce, agency. We had a lot of Shopify stores. I think we had about 113 Shopify brands, and we were specializing in online marketing, doing a lot of paid ads, Facebook, Google, and we learned how to, do drop shipping at a very high rate. So 2018 was the first year we hit 7 figures. I think we did about 1.2 that year. And then, we backdoored in 2019. So those 2 years that I had was probably one of the highest of my career. And then in 2020, I was able to successfully do an exit. If anybody doesn't know, an exit is essentially when you sell your company for a lot of money, typically, and they go based off of your revenue for the past couple of years. So those was from a business standpoint, a career standpoint, those was probably my highest point. And then obviously, man, being able to buy a home, I think was a big accomplishment for me, because I wanted to be able to support my family that year. I bought within, I guess, a year and a half, I bought a house, got married, had a wedding, and contributing
all expensive things,
all the very expensive things. So those were some really, really big accomplishments for me.
And I want to be able to, for one, put a definition to it and quantify it as well too, when I was speaking on myself. Because some people might not know what a quota is.
Oh, that's right.
When a company gives you a quota, it's essentially what the number they're expecting you to hit in terms of sales. So when I say I was able to do 200% of quota, it's essentially doubling what they expected me to do in that business year. So that was probably my biggest accomplishment, just kind of putting a number to it.
Okay. So
we talked to our followers, subscribers. We actually put a poll out there to figure out what are people wanting to know in relation to business that we can help with. And literally the number one thing that people talked about was another stream of income, a second stream of income, 3, 4, 5 streams of income, and figuring out how do they go from their day-to-day job to getting into the next steps in doing that. So what's kind of your thought process on that?
So it was really a great poll. We did it, and man, we had like 30 something replies, and about 46% of the people on those polls were saying that they wanted to create an additional stream of income. So the first thing that I thought of, and me and T was talking about it, was like, we both I kind of agree. We both agree. What is the why? What is the why behind why these people want to create additional stream of income? And when you look into the why, it's like, what's driving you? Okay, so if you're an average American right now, if you're watching this pod, and you're wanting to, create an additional 10K of revenue, or you want to create an additional 15, 20K of revenue, understand that in a business standpoint, they're always going to do revenue from a yearly standpoint. It's similar to salary. So if somebody says you make 80K a year and you're talking to somebody and you're saying you're wanting to make an additional 10K or additional 20K, they're going to quantify that as a yearly number. So if you're wanting to create, 12K of revenue extra into what you're doing, then that means that you're at 1K per month. Mm-hmm. So that number needs to be solidified in what that number looks like. And in order to do that, you have to know why you're doing it. So is it you're trying to pay for your rent, your mortgage, your car note? If you want to, travel, once or twice a year, a couple times a year, if you want to have an additional, restaurant dates or whatever it is that you're trying to accomplish, figure out what that is. And then that's how you're able to actually get a number on what you want to accomplish.
I agree with that, because what your purpose is going to completely change what that second stream of income is.
Yep.
If you're trying to make rent, you know what I'm saying? Like, it doesn't have to be, let me start an LLC and let me start investing in this. You might not have money to invest in anything.
Yep.
So for one, you've got to be able to live a lifestyle that allows you to have money to do those things. Mm-hmm. You've got to save up capital to do those things. And you can start off with doing things like Uber, which I've talked about on a previous episode. Like, I've done Uber, Lyft, DoorDash, whatever the case may be. Some people pick up the ability to do hair, cutting hair. Like, those are additional streams of income that people might not think of when they think of a second stream of income. But it's taking those skill sets that can earn you a couple $100s a month, and now you're able to save up and do something like that.
Yeah. So that pulls, me into the next point of, in my opinion, I think if you're starting from ground zero, you should be looking at what I would call as a side hustle. Okay. To me, a side hustle is anything that you're doing currently or you're going to do outside of your normal job. Okay. Now, your normal job would be a 9-to-5. If somebody goes and picks up a second job where on their off, let's say you work 3 days a week and you want to pick up another job and work 2 or 3 days a week, then that's a second job. I don't consider job number 2 or job number 3 side hustles. Okay. Those are still jobs. Maybe those 2 jobs equates to your salary on what you make per year. So if somebody asks you, what do you make per year, and you have 2 jobs and they're both equaling 110 or 90 or 80 or whatever it is, then that's your salary that you make through your job. Second, a side hustle, or that, in my opinion, second stream of income or side hustle, that's what you're doing on your own, meaning that you can control your own schedule. Okay. And you hit it on the nail. I know we talked about it, but you did hit it on the nail. To me personally, I think if you're starting from ground zero, the first thing that you should do is see what can you pick up on your phone right now. And I don't mean apply, I don't mean go through some vigorous long process. I mean something to where you can set hours per day and get on your phone and do, whether it's a skill or whether it revolves around you putting hours and time into it. But it's something that you put X amount of time into and then you receive X amount of money.
So something I will say to that tune, because everybody asks about a side hustle. I don't necessarily think that you should jump into that space until you master what's bringing you your money for sure, because side hustles are not always successful. You know what I'm saying? So I feel like you've got to get to a place where you're not doing 4, 5, 6 different things and you're the master of none of them. You need like a for sure plan. And if you listen to, different wealthy people talking, they'll say you have to master that first thing before you start opening your time up to other things, because most people are terrible at multitasking. They're terrible at having their attention on multiple things at once. So I would make sure you focus in on that first thing that you're doing, making a stable income to the point that the time that you do in these side hustles does not subtract from that At least that's my opinion.
Yes, and that's why it's called a side hustle. It's not just called a hustle. So if whatever your 9 to 5 is, and that we were gonna talk about this a little later, but guys, all right. No matter what your side hustle is doing, okay, even if let's say you had a 10K goal, 20K goal, or whatever it is, even if you've hit 40 or 50K goal, guys, keep your main thing the main thing, because side hustles kind of go up and down. All right. If let's say you have a side hustle where you picked up a camera and you started taking pictures and doing photo shoots and doing videos and things like that, and you're now booked and busy, and you feel like you're ready to leave the 9 to 5 because you don't want to work for the man anymore. I only feel that you have to go through, the different circles of entrepreneurship first. You don't jump the gun and leave your 9 to 5, because it's all a cycle. Mm-hmm. There's down months, there's like down periods of business, and then there's up periods. You may start off in the summer or during the spring when it's booming. Mm-hmm. And then what happens in the fall when there's, no money for them? Then now you're figuring out, like, how am I looking for rent? Mm-hmm. So I think the biggest thing is keep your main thing the main thing, which is your job, right? And then when you do add that side hustle, quantify it into how many hours you need to take to be able to make your goal. If you don't have a goal, then you don't need to start it yet.
Yeah. So can you give, and I know we talked Uber, Lyft, DoorDash, a couple of those things like that.
Yeah.
Can you give an example? I think when it comes to side hustles, there's two different ways to look at it, because you have things that are passive, mm-hmm. things that are making money while you sleep, things that you're not actively doing that can bring you income. And then you have things that are requiring your skill set, like barbers or hair or even mowing somebody's lawn, which I feel like we all did that at some point just for extra money on the side as kids. Can you give an example of something that's passive and something that's active as a side hustle?
I don't think that you should start off trying to chase a passive side hustle before you've done anything active.
Okay.
So that's my opinion. I don't think you don't start the store or don't start anything that you're starting off as a side hustle. To me, when it becomes passive, it's a business at that point. Mm-hmm. Because you have to put X amount of energy and work into it, and then that's when it becomes passive. I think when you're starting a side hustle, you have to put work, you have to put hours into it. So it's important. And I don't think that people should see a side hustle as being passive until you have been able to save or raise X amount of money.
I agree.
The number to me is always at least 10K. Okay. You have to know how to save, budget 10K, like have an account where you can open it up in your phone and you're able to see 10,000,000. I don't mean credit cards. I don't mean going into debt. I don't mean borrowing from nobody. I mean, you have put time and effort into your side hustle and you've been able to save up to 10K.
So that raises a good question, because I've read in several different studies and things like that, most people don't have an account with $1,000 to their name.
Right.
How do you go from your regular 9 to 5, you're just trying to make it with your paycheck? How do you go from that to saving up to $1,000, $5,000, or hitting that 10K mark where it's finally like, this number that I've been waiting on, now I can actively invest in something or start some sort of business? How are we getting to that point?
So Black people, in my opinion, a lot of people always talk about that we have a savings problem, like we can't save money. That's what a lot of people say. Black people can't save. We have a saving problem. I think the biggest elephant in the room is we have an income problem. Statistics show that from an income standpoint, we're at the lowest. We're on the lowest totem pole from the income. It's easier to save when you're making more money. Yeah. So I think to combat saving, we have to figure out how to make more money. Okay. And we have literally just gave multiple options and ways. And guys, it's not harder than what we just said. I know it's kind of cliche, but you have DoorDash, you have Uber, you have Uber Eats, you have Amazon delivery, you have different delivery and driving apps. If you have a car, there goes your side hustle. If you're able to, sometimes it's just going from doing guerrilla marketing and carrying a flyer or something and delivering, 20, 30 of those, whatever it is. But in my opinion, right as we speak right now, if you have a car, you can do Uber Eats, you can do DoorDash, you can do Uber, you can do Amazon delivery. Those are 4 or 5 different actionable items where you can say, if my job is to create $2,000 a month, that's $24,000 in a year, right? On average, they say that if you're able to clock in at least 3 to 4 hours in a day, you can get to the point where you're making an extra $100 a day on those delivery apps.
Yeah.
So what that says is, if you know that in a month that you want to get to 2,000, then there it goes. Yeah. Out of the month, you need to be clocked in at least 20 times.
I agree with you that it is, a lot of this is an income problem.
Yeah.
But I think there's also that elephant in the room where we have a spending problem as well too, where, when people start making a little bit more and more money, they start spending a lot more and more money.
That's very true.
So they get to the point where their increase in salary or income is not reflective in the lifestyle that they choose. So you've got people who, I'm making a little bit more money, let me buy this car, or let me buy these other material things, or I move into a nicer, newer apartment where I don't think people have a really, really strong understanding of their finances to see that they're outspending the money that they've now have started to earn.
Right.
And I think that we have a big spending problem in our community.
I agree. And something that we haven't touched on yet is when you do figure out that, if you're watching this, okay, we've now have given you what a side hustle is, and then we've given you some side hustle options. All right. In the future pods, we can get into some other ones where I'm going to talk a little deeper into it, but you now have side. It's not pretty. It's not pretty at all. T.O. talked about how at one point he was in the NFL and he was doing Uber to afford his BMW. Okay. So there's times when if you know that my goal is to get to that 10K first so I can start that business or whatever you're looking at, these are the things that you have to do that may not be pretty. Okay. And then when you talk about a spending problem, I think that in order to combat having a spending problem, you have to be able to know how to save and budget when you're broke.
I agree.
Yeah,
I agree. I think there's a couple different ways of doing it, and I learned this from a book that I read. I don't know if you ever read a book, Atomic Habits, but it talks about the things that we do habitually and how we can use that to help us in all different types of things. Financial being one of them. So one of the ways that helps me to save, because some people aren't actively thinking about, I need to save X amount of dollars a month, or I'm going to put this away every month. Not everybody's got their piggy bank method. You know what I'm saying?
Right.
I automate it. So for me, I don't think about it. I've got multiple banks. I've got one bank account with Northwestern Mutual that takes a sizable amount of money from me every month, but I don't think about it. It's not something that I actively have to do. And that's my way of budgeting without having to actively think about it. So there's no emotion behind it. There's no, for me, I had a good month this month in sales.
Right.
Let me be able to put this amount in. It's taking it out regardless. I've got another account that takes money from me every Friday. I don't think about it. So what's helped me out in that instance of saving and budgeting is by automating it. And that's something that not a lot of people will think of. They're moving money from this account and that account. I don't even want to think about it.
Yeah.
I want to just go about my day-to-day process. So the ability to automate a habit has made it very, very easy for me to save in that instance. Yeah.
But something that you got to realize is you are making X amount of money though. Right. So when you talk about automations and pulling out from an account automatically, that's great. Everyone wants to get to that point, but it's easier to get there when you're making already X amount. When you're kind of going from bill to bill and you don't know where money is coming from and how you're going to pay for this and that, it's kind of harder to automate that. So I think that if we're going into the budget realm of things, there's a I call it my when I'm mentoring people, and one of the first things that we talk about when when you go into mentorship with me. I'm not mentoring at the moment, but I used to, mentor a lot of younger entrepreneurs that are coming in, and a lot of them are wanting to they have their own car, their own apartment, and they're trying to create this extra income for themselves. I used to have a 10K savings plan. Okay. And I used to tell them all the time, you are not ready to invest into anything if you cannot show me 10K in your account. Okay, that means that you're not ready. Yeah. All right. So there's a way that we went about it. This is basically actionable steps of how we used to do it. Okay. Basically, there's an app called Rocket Money. All right. Sometimes these apps change names and stuff like that. They get bought out and this and that. We talked about.
We understand the gist of it, but explain it. Though.
But there's an app. It's called Rocket Money, or you can get similar apps to where if you put all of your account information into the app, it will literally tell you from a monthly standpoint exactly what you're spending on each thing in each category. So if you're spending money on Hulu, Netflix, ESPN app, your phone bill, and all these different subscriptions that people are doing, or if you're spending at a restaurant spending and you're spending, $600 a month on restaurant spending, the app is going to be able to tell you what you're doing. Okay. The number one thing that I make, the students and mentees that I used to mentor is what I want you to do is get your necessity spending that you're spending on each month. So this is just going to be, your rent, your car payment, your basic food, things like that. And what you're going to do is you're going to have to cut out everything else. And I know it's easier said than done. Right. But get mom's Netflix or brother Netflix, sister Netflix, or your friend, whoever, borrow their Netflix account and then just, use YouTube. Get somebody's YouTube TV, but cut out all of the excess spending, and you're going to see that there's an extra amount per month that you're able to save off of all that excess spending. Yeah. And that app will be able to show you what you're doing. So number one, get all your necessities and see which you can cut out that you're not using. Maybe you don't need, get coffee at the house.
See, I was going to say something.
You don't need to go to Starbucks.
Exactly. So you're talking a lot of this is a subscription based, because a lot of times people subscribe to things, gym memberships that they're not using, at multiple gyms. Yep. Different entertainment things. You don't need all of those things. But even at a smaller scale, something like Starbucks, right, and the money that you spend. There's people spending $8 to $15 a day on coffee. Right. So when I'm talking about I'm automating this to pull out money from an account and put it somewhere else that I don't think about it, you take $15 a day at Starbucks, multiply that by 5 days a week that you're going to work. What's 5 times or 15 times 5? That's what, 75? Right. That's $75 per week. Yeah. That you could have put into somewhere, which turns into $300 a month. Right. $300 a month adds up over the course of a year. So what we're essentially talking about is lifestyle things. Yeah. And things that we could do to save money in our lifestyle, going out to eat, subscriptions, and things that we just do. It's not out of necessity. Essentially, is what we're talking.
Yeah, absolutely, and I agree there. And basically, where I was getting to is once you're able to get your necessities, this needs to be a specific number. So if it's 3,900, 2,850, or 4,600, and whatever that number is. You need to get exactly what this number is. You need to see what your income is. All right. Your total income minus taxes, minus healthcare, whatever it is that you get, your total monthly income. You got to tally that up and come out with a number. Then you need to see what all your necessities is that you need. Your food, your rent, all of that. Tally that number up. Cut out all of the extra subscriptions that you feel like you don't need. These are the sacrifices that you're going to have to do as you're saving yourself up. And then what you do from there is you reverse engineer it. So what you're going to have to do is do this. If I know that every 2 weeks I'm getting paid X amount of money, and I know that based off of my necessities and what I'm getting paid, I'm making an extra $1,000. I believe you probably, I'm sure you have multiple accounts. Everyone should have more than one account. Okay, at least one of your account should be going to all your necessities. Mm-hmm. This is what you talked about earlier, your subscription, your automations. Mm-hmm. Your automations is hooked up to your necessity account. These are your accounts that you know, no matter what, I got to pay rent, I got to pay car note, I got to pay this. These are your necessity account. Mm-hmm. Then there should be an extra account. Your extra account is now your savings account. This is your budget account. This is the account that you're doing to get up to that 10K. Every month that you're bringing in an extra 1K, you need to have a budget of, are you going to put 500 here? Mm-hmm. Are you going to put 750? Are you going to put 250? Whatever you choose to put in that second account, God himself couldn't get you to dip into that account. Right. You see what I'm saying? Yep. No matter, I don't care if mom, dad, whoever, somebody's struggling, I'm down and out. Whatever goes into that second account, that is law. You do not touch it. Mm-hmm. That is your livelihood. That's your future. You think of that second account as your future. Yeah. If it's $500 a month, then you're doing 500 times 12. Mm-hmm. And that's how much you can save in a year. Let's say you was able to put $1,000 in that account every month. Then that's now an extra 12,000. That means that, by month 10, you're 10K ready. You sacrificed 10 months. Yeah. So to me, your 10K savings plan is going to be, how much money are you making? How much money can you budget? If your necessities is more than what you're making, then that means that the SRT need to go back to the dealership.
The reason why the reason why I like using apps like this, like Rocket Money and things like that, or even just a budget sheet in general, it helps you change the relationship that you have with money. Yeah. Because let's be honest, a lot of us are emotionally tied to our money in a way that can be unhealthy. And by doing it in a way of having these apps or a budget sheet, it takes that away. If you haven't done a budget sheet and really looked at what you're spending, I remember my first time linking with a financial advisor and really, pen by pen, figuring out what am I spending. I was disgusted. Yeah. Like, to be honest with you, the amount of money that I spend on a month, if you don't think about it, you're not going to know. So like I mentioned, those things that we do on a day-to-day basis, whether it's go to Starbucks or maybe getting your hair cut every week instead of every other week, those things that are very, very small to you and you don't think about it, in the long run, those add up significantly. Yeah. So that's when we're looking at our lifestyle, what are the things that we can actively do to bring it down a little bit? And that's, obviously we want you to be able to enjoy yourself, but in our budget, make room for the things to enjoy ourselves. You got your necessity, you've got entertainment, you have those things set up so there's no surprises.
And all these different things. Yeah.
You don't want any surprises. You want to be able to enjoy yourself, be able to save that money in case there are those investments and things that you want to make. And then also having that emergency fund in case something happens. Yeah. These things are all planned, but if you don't do some sort of a budget sheet, you kind of just, what I'm gonna say is going through the vibes. Yeah. You know what I'm saying? You're not really planning for your future. You're just living check to check. And who wants to do that forever?
Yeah. And to be honest, I want to be here to have a voice in our, when an average American, is watching this podcast, our average Black American is watching this podcast. I want to be able to talk to that group, and to be completely honest, from my experience, because I've have talked to a lot of people that are doing this, the average person does not have a budget sheet. Mm-hmm. The average person does not know how much exactly their amount is that they're spending per month, or that they're spending on necessities. And this is a good practice. So actionable steps right now, what me and T.O. is agreeing on here is find an app, okay? Because I'm not even going to tell you an Excel sheet and all this. I don't want to even make things complicated. There's apps for this, okay? Find an app or manually go through your balance sheet or your statement, your bank statement. But find an app or go through your bank statement and see what you're spending on a monthly standpoint. You should have a exact number of what you're spending. That's a total number. And then what you also want to do is, what is your necessities? Your necessities is going to be how you're living, rent, mortgage, rent or mortgage, and then your other necessity is going to be your transportation. That's what I was getting at. Your transportation, how you're getting back and forth to where you go, and then the other thing is just going to be food.
Yeah.
You know, and then if you have self-care, entertainment, or anything extra outside of that, create a small budget for that. But those are going to be your necessities. It's going to be all your necessities. Anything outside of that is going to be what you want to decrease in order to start putting money into your fund. Call it your name. That's your fund. All right. And that fund, you want to be able to get to $10,000. Yep. When you get to 10K, then you'll be ready to start any type of business. But before then, you got to be able to get that budget down. And side hustles may help. Yep. Side hustles is not a part of that 10K. You can start doing side hustles tomorrow, today. Right. It's not a part of that.
So obviously when you get to that 10K, you're able to start getting into some of these investments and things of that nature. That's 10K of your cash. What happens when we get into businesses that require a lot more in terms of your entry point, and now we're involving banks and things like that. So we're talking about the ability to get approved for higher dollar amounts. And I think one of the biggest disservices to the average American is the miseducation of financial literacy, the idea of knowing good credit, bad credit, the importance of it, how it can impact you and your future endeavors that you choose to do. There's a serious lack of education on that. So a lot of people don't understand why you need good credit. A lot of people are like, I'm paying cash for everything. Yeah. I don't really care about credit. I just pay cash. And that mentality can be damaging in your future, investments and things of that nature. So kind of get into understanding, the importance of good credit, the type of impact that it can have as you start to get into these business spaces.
So I'll give you a quick example. I remember there was a time where I was living in Austin, and I was doing exceptionally well. I had a good amount of money in my bank account, but I lived the old, Nigerian way, which is like my dad is, in Nigeria, we don't really use credit. Mm-hmm. In Nigeria, it's like we either got enough money to buy it or we don't. Mm-hmm. So I was doing it that way. And it's crazy because I went in to get a new car because at that time I had, my mom was who helped me with the first car. Mm-hmm. So now I'm getting to the point where, in which like helped me finance it. And then I was able to start paying monthly payments on it. So now I'm going into the Range Rover. So now I'm going in, I'm trying to get my Range Rover, and I need a cosigner because I don't even use credit. Mm-hmm. So my now wife had to cosign for my Range Rover at that time. And that's crazy because if you look at my account, I'm just like, hold on, like all this money in it and I can't even buy the car. Mm-hmm. Like, so it lets you know like credit is very important. Mm-hmm. It doesn't really matter how much you're making. The way the banks see it is your credit profile and your credit history. Yeah. Sometimes even if you have a decent credit score, which at the time I think my credit score was decent, but I wasn't even financing anything major. Yeah. So I didn't have a strong credit history, and they didn't want to approve that purchase.
Yeah. It is sad to see, like I talked about, the miseducation of credit, because again, we're talking about the money that you have in the bank and then still needing a cosigner. This was when I was fresh out of playing ball. So, obviously I'm doing fine financially, but I remember one instance when I had moved into a spot and I bought a bunch of furniture. I didn't know the difference between a debit card and a credit card. So here I am buying X amount of thousands of dollars worth of furniture on my credit card. And I'm like, all right, cool. Yeah. I got this furniture. I never thought about it again until years later. Yeah. Because I thought, okay, I just bought it. Meanwhile, it's just adding up. And that negatively affected my credit score, and I had money. Right. So, it's things like that, having a better understanding of how these banks are viewing you as a person, what makes you a riskier or less risky applicant, and just having a better understanding of that. In my field now, I talk about being in sales a lot, so I have to get people finance for certain things. I've done it, business to business. I've done it business to consumer. Yeah. When I was selling cars was when I really
when people talk, not to cut them off, when people talk about B business to business, you're going to see the term B2B. Okay, we call it B2B, business to business. That means that another business is selling to another business.
Correct.
When people talk about business to consumer, you're going to hear the term B2C. That just means that it's a business that's selling to an actual consumer, which is an individual.
Exactly. So I've done both. So to give you an example of that, I used to sell cars. Yeah. That is a consumer. That is somebody who walks in, they want a car for themselves, they buy. When I tell you that was the first time that I really got an understanding of what good credit does for somebody, what bad credit does to somebody, needing to get a cosigner from somebody's grandma from out of state, or the ability to walk in and get whatever car you want. That is, talking about the strength of good credit. When you start to see the difference between a 4% interest rate and a 20% interest rate. And it's sad to see the type of people who just don't understand how it can negatively affect them. I've seen people, just sitting down having conversations with, consumers are like, oh, this is the car that I want. I don't care how much it costs. I'll put down whatever money is necessary. I want that Dodge Charger. And their interest rate is 18%. And they don't understand how that negatively affects them. And then you've got other people who are like, you know what, I had this car and I couldn't make the payments anymore, or I didn't want the car anymore, so I just stopped making payments. That's a terrible mindset, and you don't realize how that's going to negatively affect you as a consumer. On the flip side of what I do now, I deal directly with business owners, mostly doctors and physicians, medical providers who are looking to add large amounts of capital to their business structure. And I've seen divorces negatively affect them, loans negatively affect them, being behind on child support negatively affect them. There's things that you've got to do to stay on track so the bank views you as worthy of this loan that you're looking for, especially when you start getting into those 6-7 figure loans. Yeah. So the key point that you're basically talking about is how the banks view you. So for anybody that's watching this, and let's talk about credit individually, right? You're going to have traditional funding. This is your traditional, you go into Bank of America, Wells Fargo, Chase, wherever these big banking institutions are, and you're taking out a loan, you're taking out a line of credit, that's going to be your traditional funding. They have other ways of going through funding. You have like third-party funding, like your lending tree type of deal. You have private funding, which is going to be like sometimes it's private equity firms that have funds that they do for people. There's so many different ways of where you can go out and give money. Number one way of how you're going to be able to get money from these banks is if your personal credit matches what you're trying to accomplish, right? Mm-hmm. Anybody else saying that, oh, you can go get business funding and you can get up to $500K, without using your personal credit. What they're doing is they're trying to sign you up for a particular mentorship course or whatever mentor or whatever program they have. All right. Mm-hmm. At the end of the day, if you're trying to get business credit, you need to make sure that you're working on your personal credit as well as your business credit. Mm-hmm. Because 9 times out of 10, for any bank that's giving you a significant amount of money, they are going to look at your personal credit. If they're not looking at your personal credit and only your business credit, then they're wanting to look at how much you're actually your business is generating on a monthly standpoint. And most of the time, if you're looking for a business funding or credit or a loan, then you're probably a new business and you don't have much money being generated. So just understand that from a funding standpoint, the banks they're a business. When we put all of our money in a bank, the bank is lending that out to other people to make money off of our money. The banks look at it as a business. And if they see you as a high risk person, mm-hmm. then your interest rate will either be sky high or they're going to decline you. Mm-hmm. If they see you as a low risk person, your interest rates will be lower and you'll get accepted. So the goal here is you want to spend your time when you're using credit, when you are using your credit card, only use credit on things that you actually can afford and pay back soon. Mm-hmm. Okay. So if I'm going across the street and I'm buying something for $2,000,
I want to be able to pay that back within 30 days. If you know that you can afford to pay that back and you just want to only pay the payments or the minimum payments, then that means that you can't afford what you're looking to buy and you should just pass on it. Okay. And that needs to be very important when you look at credit. Credit, you want to, what's the utilization that you keep on your personal? You know?
Under 20%.
Under 20%. Okay. Me personally, I like to probably stay between under 10 to 15%. The bureaus would tell you under 30%. Okay. But I think if you're staying under 20%, that's a good range to be. That means that no matter what, even if you have 100K of credit, you're not using more than 20K. I know it's crazy to sound as it sounds, but the more the banks are able to see that you're not using a lot of your credit, what are they thinking? That you have the money. Okay.
I think a lot of this, like we talked about, is just changing the relationship that we have with money and the way we think about it.
Yeah.
Because I know there's people who they think of their credit card as extra money.
Yeah.
It's not extra money. You've got to be able to pay that off, as you mentioned, within 30 days to be reflected well on your credit. I know there's people, I don't know if you have people like this in your life, but they're scared of using their credit card. There's some people who don't have a credit card. So if you're the average person and you have no personal credit because all you're using is your debit card and money straight out of your account, what are some things that people can start doing to start building up that personal credit?
Yeah. So number one is you want to go, if you can't apply for a credit card. Okay. Apply for a credit card. Remember, where you start building a relationship with a bank, those are the same banks and institutions that is going to lend you money as you build more history with them. So if you start off with Wells Fargo, if you start off with Bank of America, in my opinion, I think that it's okay in certain situations to go with the bigger banks if you are starting. I know people talk about credit unions and things like that. But, when you look at lending, a lot of people like Chase, for example, but statistically, if you are a new business and you don't have a long history with Chase, they're more inclined to not accept you for whatever you're applying for. Okay. Versus if you go with Bank of America is more inclined to accept new members if you have a history. Okay. But to get back to where we're going, if number one, apply for a credit card. Okay. If you can get accepted with the credit card, then you want to start using the credit card, take your debit card and put it away. Put it under a drawer, put it somewhere else. Be forced to use your credit card and get used to paying whatever you use back within that same month. Yep. A good strategy is putting your credit card on auto pay into your checking account. So once you get the credit card, log into your credit card app, which you can do with the big banks. I think it's easier. And then put the auto pay into your checking account. If you cannot get approved for a credit card, then you want to go to the bank and you want to tell them that you want a secured credit card. What a secured credit card means that you're going to put money into that account. Let's say it's $500. Most of the time it's between like $300 or $500, somewhere around there. What a secured credit card is you're putting cash into that account. And then that's your credit limit. So if you start off at 500, you're getting 500 cash and you're putting into it, and then they're giving you a line of credit for 500. There is a good company that do it. I think the name is First National Bank. Okay. First National Bank is a good bank that you can go out and get a secured credit card from. You put money into it, and then they'll use it as your line of credit, and then you start using your new credit card, which is that secure credit card, as your credit. Okay. Yeah.
So after you do all these things with your personal credit, like one of the major benefits of this is as you move into some of these business investments, you got to realize you don't have business credit. So like you mentioned earlier, if you don't have that personal trust or that personal credit, then it's not going to be able to help you in terms of the business credit that you have. I work with several physicians who are starting up a new business, they're starting up a new medical practice, and they don't have business credit, but the banks see their career and understand, okay, this person typically makes this much money, so we can, their risk factor is now lower, and then we see in terms of their personal credit, the only thing that's high here is their student loans, but other than that, their personal credit is stellar. So we are trusting this individual to be able to do right by us on this business investment based on what they've done with their personal credit, and they're viewed as a less risky applicant.
Right.
So, in your experience, what are some of the things that you've seen negatively affect people's credit to where it does hurt them when they're trying to apply for these other business loans?
I mean, the biggest thing that I see that hurt people's credit is when they're using their credit card, like you said, as extra cash. I mean, just comes kind of back to what we already talked about. That to me is the biggest thing. When people, let's say you did, let's go through the tree. Let's say you started with the secure credit for $500. You were spending months of paying everything on time, and then they upped it to $1,000, and then they gave you a $3,000 credit limit, and then they gave you a $5,000 credit limit. And as soon as you get the $5,000, the first thing you do is go out and buy a car and put down $4,200 or whatever, because you saw it as, I have $5,000 worth of cash. But in actuality, if you look into your bank account, you only have, $600 sitting there.
Right.
Well, that means now your utilization is above 80%, which is now negatively hurting your credit. So you cannot view credit as, like you said, extra money. I think that's the number one reason of why people get jammed up on their credit.
Money.
Yeah.
So, a lot of times when people log into these apps and they look at, okay, what's my minimum payment for this month?
Yeah.
What's kind of your thoughts on that? Because some people are just going to pay, let's say it's $5,000 limit and you run it up, and your minimum payment's $100 a month. Do you recommend following that, or obviously, paying more? Like, what's kind of your relationship with that?
Yeah. So if you guys can listen to me when I tell you from a credit standpoint, right? It's I know it's crazy to think of, but if you cannot afford to pay that money back within 30 days, then that's a good marker of you cannot afford what it is that you're purchasing. Okay. Or at least a good chunk. Okay. Now, this is starting out. Eventually, when you get to the point of having like $50,000 credit and you go out and charge $6,000, is then understand that your utilization is still good. But when you're starting out and you only have 5,000 and then you're using 4,000, then now your utilization is not good. So a big thing of people that you got to realize is when you are using your credit card, if you pay that money back within 30 days, before your next cycle, like if your credit card date is, on the 3rd or whatever date it is, before the next cycle, pay that money back. If you cannot afford to pay that money back that's quick, that means that you just shouldn't be purchasing whatever it is that you was thinking of purchasing.
Think of it as a relationship with a friend. If you had a friend that needed to borrow $200 from you and they said, I'm going to pay you back by this date. If they didn't pay that back to you and then the next month they asked you for $50, you're less inclined to do that because you understand they're not good for it. Yeah. It's the same way the banks view us as applicants, essentially, at the end of the day.
Yeah. The method is, what you want to do with a credit from a credit standpoint is you want to essentially trick the bank. Okay. That's the goal. You want to trick the bank into thinking that I have this credit, but I don't need it. I'm just using it because it's convenient for me. Right. But I don't need to use it because I actually have money. If they think that you're using credit because you can't afford these things, then that's when your credit score is going to drop and your utilization, like you were saying, is going to go up. So the goal is to, trick the banks into thinking that I don't use money. For example, like I have Amex, I have an Amex card. And, when you get into like the platinum status, like that's like a certain credit score and credit profile for people that get approved for. I have now unlimited.
It's called spending power.
It's spending power, right? So in my app, you can literally put numbers in and see what you can spend. So there's sometimes I put in 60,000 approved, put in $100,000 approved. So they call it like unlimited spending power when you get to a certain point, which means that I literally can swipe my card for $100,000 and I will get approved. But they're only doing that because the history has shown that if I do make that swipe, I'm going to be able to pay this money back pretty quickly based off of my credit history. For somebody who's just starting out and they haven't made that history yet, there's no way in hell they may not even give you $10,000 because they're thinking like, if I was to loan this $10,000 to you, there's no way, because you're just buying this because you can, and then you may not have no interest in paying me back.
Right.
It's all a business.
Okay.
Yeah. So talk to us. We're gonna. This is episode 1 of the business series, episode 6 of our general. But talk to me. Let us know kind of some credit questions that you guys may have of what we talked about today. Some side hustle. What are some side hustles that you guys are thinking of? I want to be able to give you feedback on what side hustles you're thinking. We didn't talk about it today, but there is a certain thing of passion projects versus side hustles, and just understand that. When you get into passion projects, for example, our podcast right now, I think it's safe to say our podcast is a passion project of ours. We're not looking at it from a side hustle because we know that it's going to take time. Mm-hmm. Side hustles to me are things that you can do right away to start earning money. Yep. So talk to us. Let us know what side hustle you're thinking of and give us feedback on that credit.
As we continue this series, we will have more polls. We want to know exactly the things that you guys want to hear about so we can answer those questions directly. I think this will be good for our subscribers who are wanting to grow and expand as individuals and as businesses. So we're looking forward to continuing this podcast, continuing this series. Again, my name's Tobin. This is my boy Mike. Episode 6 of All Things Considered.
And we out.
We out.
Peace.
Hey. Dreaming how dreamers do, most of my life feel like deja vu. Even when the pressure's on, I'm careful how I make my moves. Mamba mentality, I ain't come here to play to lose. Why would I play with you? But if you made me choose,